Hello everyone, and welcome to today's comprehensive market wrap for the Australian stock market on this Thursday, March 26, 2026. Today, the S&P ASX 200 pulled back slightly after yesterday's strong rally, closing down 0.45% to finish at approximately 8,487 points. It was a session of consolidation as the index traded within a defined range, fluctuating between 8,450 and 8,130 throughout the day. This moderation came primarily from profit-taking in the resources sector following recent gains, coupled with a series of mixed signals from global markets. Geopolitical tensions in the Middle East continued to weigh on investor sentiment, tempering the gains we saw during the prior rebound. Investors spent the day digesting recent economic data, including softer-than-expected PMIs, while waiting for further insights into global inflation trends. In the commodities space, we saw a notable divergence. Iron ore dipped marginally, while gold remained a resilient safe haven for cautious traders. Turning our attention to the sectors, the materials space retreated from its recent highs as miners faced significant selling pressure. Heavyweights were not immune. BHP Group eased around 1.2%, while Rio Tinto slipped 0.8% as the broader resource rally took a breather. Fortescue followed suit, shedding 1.5%. However, it wasn't all red in materials, as gold miners provided some much-needed pockets of resilience. The financial sector was a mixed bag today. The Commonwealth Bank dipped 0.5%, though some of its Big Four peers managed to hold steady. The energy sector also edged lower, primarily responding to a softening in international oil prices as supply concerns fluctuated. Let's look at the top movers. Gold-focused names shone brightly. Genesis Minerals climbed 4.2%, and Newmont added 3.1%. Dateline Resources rose 2.8% on precious metals strength, while Mineral Resources impressively bucked the broader resource trend with a 1.5% gain. On the flip side, losers were led by Helia Group, down another 3%, and James Hardie Industries, which finished the day off 2.1%. Bellevue Gold also faced pressure, dropping 4%, while several select industrials struggled as investors rotated their portfolios. Overall, the ASX displayed a classic consolidation pattern today, balancing recent volatility with some selective buying in defensive sectors. Taking a deeper dive into that gold resilience, we see investors increasingly turning to bullion as a hedge against the ongoing global uncertainty. The marginal dip in iron ore reflects a cautious outlook on global industrial demand, though major miners remain profitable at these levels. We noticed a strategic shift today, with institutional investors moving slightly more into defensives like utilities to weather the current volatility. This trend was mirrored in global markets, where the overnight session in the US saw a similar cautious approach ahead of the weekend. The Australian dollar also showed some interesting movement, trading tightly as it reacts to the divergence in commodity prices we've discussed. Days like today are essential for the market to reset. For investors, it's an opportunity to reevaluate positions and look for value. Looking at the weekly view, the ASX remains in a relatively strong position despite today's pullback, maintaining most of its recent rally. Heading into next week, analysts will be watching the materials sector closely to see if today's profit-taking turns into a deeper trend. In the financial space, the focus remains on the RBA's next moves and how they might influence bank margins and mortgage lending. Inflation remains the key driver of market sentiment. Any surprises in upcoming CPI data could spark significant volatility in the ASX. Our internal sentiment index shows a shift toward caution as traders look to de-risk ahead of potential weekend geopolitical developments. It's also worth noting the correlation between these commodity flows and our currency, which remains a vital link for our export-heavy economy. So, what should you watch? Keep a close eye on weekend news regarding global conflicts and any shifts in major commodity flows. U.S. futures will also be a primary indicator. A strong close on Wall Street tonight could pave the way for a Monday recovery. Looking ahead to Monday, we have several domestic data releases that could influence the early session trading volume. We are also entering a crucial period for corporate earnings, which will provide a clearer picture of domestic business health. Long-term investors are also keeping a steady eye on the energy transition sector, which continues to attract selective interest. To recap, the ASX 200 finished down 0.45% at 8,487 points, led by profit-taking in the materials sector despite strength in gold. Thanks for watching today's wrap. Don't forget to subscribe for your daily ASX updates and hit the bell icon for notifications. We'll be back tomorrow with more insights. Have a great evening, and we'll see you then.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.